Hi everyone, this is Eric here with the John Miller Real Estate Team, Keller Williams Realty in Westborough. Hope everyone's having a great holiday season. I want to thank you so much for your business in 2011. I'm going to today go into a recap on 2011, where the market's at now, and where it's projected to go in 2012. Give you some insight as to where some good opportunities are for the future and in the current market. The first thing that all economists are basically agreeing on, as you'll see on all these slides, there's going to be economist or some expert in the field cited at the bottom here. And to sum this up, housing is the most affordable it's been since 1971. Um, One of the factors that played a big role in that throughout the years that rates continued to go down. They're at the lowest they've ever been. Um, and one thing I want to reiterate is that over the past 10 years, on average, homes have gone up 41%. In the stock market, the only area that you would have seen the average go up would have been in the Dow. The S&P and NASDAQ has gone down over the past 10 years. So as you can see here, real estate overall is a good investment. You need a place to live, so it's not a bad place to put your money. Uh, Transactions in 2011 throughout the country have gone up. Number of sales is what this is showing. In Mass, the number of sales has gone up by 12%. What that has resulted in currently, inventory, so homes on the market, is the lowest that it's been in 4 years. So I'm going to get into a little bit more detail on it. Throughout 2011, what we've seen is that the number of distressed sales has gone down gradually. Started at 40% and down to most recently 28% in October. The reason this is that the banks, as you may have heard, uh, they have been basically blocked from putting these homes on the market that they have already foreclosed on. So what that has resulted in, I'll bring up a slide now. The foreclosure inventory is at the highest it's ever been, uh, because the banks have been foreclosing on these houses and are getting their paperwork together in order to put them on the market. They are forecasted to be hitting the market in the first and second quarter of 2012. And what I predicted that will do for the average sales price of a home is it will definitely go down in the first 2 quarters of next year. And going back to the slide we were just on, is because these homes are going to be in such bad condition. They will have been unoccupied for an entire winter in New England. That's not good for the condition of any home to be unoccupied. So basically, I see a um, direct relationship with the percentage of distressed sales and where the price will go. So I anticipate this 28% spiking up in the new year, going up to, say, at least back up to 40% or higher. And the higher percentage that are these homes in bad condition, the lower the average sales price will go. The way I interpret that is that that doesn't necessarily mean that if your house is in excellent condition, that it won't sell for the same price it would today. What it does mean is that there is a much less likelihood of it selling because there'll be a higher inventory on the market. So as I was saying, the inventory is at the lowest it's been in 4 years. So now is a good time to get it on the market to avoid going on the market when the bank-owned properties are competition. Next up, going to go specifically into Mass and what's going on as far as their bank-owned inventory. Mass, as you'll see here, has a 6-month backup inventory currently, and in comparison to the rest of the country, that is not that bad. Um, in some areas that actually you think would be really, really bad, for example, Nevada is known to be one of the absolute the states hit hardest by foreclosures, and that is the case. But they've cleared out a lot of their inventory because they kind of got an early jump on the game and really didn't hit that point where the government stepped in and stopped them from putting these foreclosed homes on the market. So when I see a low number of months inventory, I think that those are homes that will see an uptick in price quicker than other markets. And you'll see some have a huge inventory, and I think that they are really far from the bottom and that they're going to see significant drops in the future. Um, Let me see here. Okay, the next thing I want to get into a little bit is that uh, just because you think you're in a nice community and that this isn't something that you'll be affected by, actually the truth is that the average income of families, if the income is on average lower, there's a less likelihood that they're going to have their home foreclosed. Basically, as the average income point goes up and the average purchase price goes up, or sales price, you're going to have a higher and higher likelihood of seeing bank-owned properties being sold in your community. So that's what this graph is showing here. What I want to now talk to you about is that the percentage of homes that go under agreement and actually close, more and more deals are falling apart as time goes by. And the reason is with these distressed properties, you really have to have a great team in place in order to purchase these. I know with our team at the John Miller Real Estate Team, we've made a huge effort to align ourselves with the lender, that he does an amazing job with rehabilitation loans. He is in a department that only does rehab loans. His underwriters only know rehab loans, and that allows him to do an excellent job. Every other lender that I've ever seen try to do a rehab loan has completely botched it. So we do have a good lender on our side. The other thing that basically we are requiring our investors to do when we go out and look at bank-owned properties in tough condition is either A, they must be a contractor, or B, bring a contractor with you that you know and trust, or C, we can provide a good contractor for you to accompany you on your showings. Because if you're making an investment of over $100,000, you want a contractor to give you an idea where you're going to stand with these properties before you put in an offer, and also help you find the best value um, amongst the properties that you see. So that's a great little program that we got going for investors. And in 2012, that's really where I see the opportunity. If you're looking to buy an investment property, the minimum down payment is 25% down, and you can finance the entire rehab of the home. If you're looking for a primary residence, you can do it with as little as 3.5%, and the lender will allow you to finance the entire rehab of the loan, or of the home. So that's something to keep in mind. I think that's where the opportunity is in 2012, is with these bank-owned homes. If you're an investor or you're a first-time home buyer, we have a good team to help you out with those. If you're looking to sell your home now, it's in good condition. The inventory is low now. You can avoid the competition of bank-owned properties coming up in the first and second quarter of next year, and just give yourself a much better chance of selling the property next year. So that basically sums up where I think things are at and where they're going. Give me a call or email if you have any questions. I can be happy to share some of these slides with you. And have a great new year. Take care.